So what we're going to do is look at the public health context, overall fiscal policy strategy, broadly defined, and then we're going to try to apply the strategy with specific fiscal policy instruments by looking at an example for a high-income country, the United States, and an example from a lower middle-income country, Indonesia, and then a few words about the path forward. So for the public health context, a few fundamental principles. You really can't formulate appropriate fiscal policy for either relief or recovery without understanding the cause of economic disruption, COVID-19, or formerly SARS-CoV-2. And public health versus economic health is in many ways a false choice. A healthy economy needs healthy population, and you can't save livelihoods without saving lives. But there are still difficult trade-offs, with health benefits diminishing and economic costs rising, neither distributed equally. A longer health intervention significantly reduce economic activity. So what do we know about COVID-19? Like SARS, it's a respiratory illness caused by a coronavirus spread by respiratory droplets produced by coughs and sneezes or contact with contaminated surfaces. It's got similar stability, worsening symptoms that can lead to serious illness, especially for similar at-risk groups, and we don't have specific treatments or vaccines. But unlike SARS, it has different symptoms. It's generally less severe, but spreads more easily, particularly by asymptomatic people, making detection more difficult. What don't we know about COVID-19? Transmission, infection, and immunity rates. We're now only testing those with severe symptoms or at high risk rather than mass testing or some kind of stratified random sample testing. And we really don't know the mortality rate or technically the case-specific death rate because of decentralized reporting, different reporting protocols, and disincentives to report by both infected people and government officials. Sticking with the public health context, we have really two basic strategies to respond to COVID-19. The optimal response is containment. That is containment via proactive testing, treatment, and tracing, the 3 Ts. Most countries no longer have this option because of an inability or an unwillingness to undertake broad testing. We're now only testing to confirm the virus in individuals, but not to determine the prevalence in the community. And this is mainly because of a political dilemma that many countries are facing. If you're aggressive before there's widespread public acknowledgement of an emergency, you're considered an alarmist. And then anything you do after the crisis hits is considered insufficient. So now it's undergoing community spread globally, and a combination of COVID-19's contagiousness, asymptomatic spread, and lethality means the world is now confronting a dangerous and frightening pandemic. The second best public health response to COVID-19 is mitigation. And this is what most countries are trying to do in different ways today. And that is to reduce the rate of transmission within communities. You've heard the phrase flatten the curve. By increasing barriers the virus has to breach via physical distancing, closing whatever you define as non-essential businesses, and requiring some form of self-isolation, and enhancing hygienic practices like vigilant hand washing. It might not reduce the total number of COVID-19 cases during the course of the pandemic, but it could prevent a peak number of cases from overwhelming health systems, and it could save lives of those who are most vulnerable. But there is a tremendous economic and social cost to this response with an inequitable impact. The poorer one is, the more difficult it is to comply with self-isolation and rigorous hygienic standards. And there is still a long-term risk of infection without a vaccine, and significant danger persists without antiviral therapies. So this is the context in which we try to think of a fiscal policy strategy in response to COVID-19. So some fundamental principles. It's the same basic strategy for all countries hit hard by COVID-19, but the specific tactics depend on the country context, available resources, existing institutional infrastructure and social protection programs, and political and cultural constraints. And this is a dynamic process, and your policies will change as conditions warrant. You have to deal with both the cause and effect. The highest priority is to provide resources to the health sector to combat the cause. The nature, the timing, magnitude of interventions to mitigate economic and social effects really depend on success in managing the pandemic. You have to deal with relief while at the same time thinking about structural relief to facilitate recovery. The primary objective of non-health expenditures is to provide immediate relief to the most vulnerable workers, either directly or via their families and employers. And when possible, you're trying to structure to facilitate a faster, smoother recovery. This will probably be an incremental recovery with full recovery dependent on health risk, and I'll come back to that at the end. And you have to coordinate fiscal and monetary policies. It's critical to have complementary fiscal and monetary policies. And the key links between these are how in the world do you finance the expenditures and at the same time maintain household and business liquidity. So thinking again in terms of broad fiscal policy strategy, how do you support the health sector in principle? You're trying to close the gap between excess demand for health services and insufficient supply of these services. And you're trying to do this by reducing the peak demand, and that is by flattening the curve, as I mentioned earlier. And to do this, you try to increase the supply of testing, PPE, personal protection equipment, ventilators, beds, and medical personnel. You're trying to provide relief and facilitate recovery by some key tactics. The first is increasing unemployment insurance coverage, magnitude, and duration, if your country has unemployment insurance. Indonesia does not, for example. How do you expand social safety net programs for low-income households? And these would be health expenses, unconditional cash transfers, food support, and some type of debt or eviction or foreclosure forbearance. How do you assist small and medium enterprises to stay afloat, to survive, mainly by how to pay overhead, and to retain at least part of their staff and pay at least part of the salaries? And how do you help strategic large businesses? Very controversial. The phrase is save Wall Street to save Main Street. How do you help these large businesses survive and maintain their payrolls, but prohibiting inappropriate use of government money, like prohibiting stock buybacks, dividend payouts, executive compensation? And I should stress that the objective here is to protect workers and productive capacity, not alleviate economic pain that should be borne by the company owners, the shareholders. And in terms of utilizing complementary monetary instruments, what you're trying to do is to maintain the flow of credit to households and businesses by reducing interest rates, purchasing securities, often known as QE, quantitative easing, lending to financial and capital markets, regulatory easing or relaxation, and international swaps. And how do you help finance fiscal expenditures? And in most countries, it's by purchasing treasury securities. This is the last slide on overall fiscal policy strategy. Some important dilemmas that policymakers face. Design challenges. The timing, if it's too fast, you can't implement it. If it's too late, it can be futile or counterproductive. The size of your intervention, if it's too small, the impact will be negligible. If it's too large, it can be wasteful. The structure, and this is important, relief is not the same as a conventional economic stimulus package during an economic downturn. The purpose is not to stimulate demand. You have a supply problem here, but to maintain a low-level equilibrium and avoid inflation without growth or stagflation. The importance of subnational governments, and some of you are out there. Often state and local governments are the best positions to identify those most in need and to act the quickest in responding to these needs. So central governments should consider channeling social protection assistance through them, and they also have their own resources to complement central government efforts. And this is especially true in federal systems like the United States or decentralized systems like Indonesia. It's important to collaborate with the private sector and community-based organizations. The government cannot do all of this by itself. Private sector resources can supplement public resources, especially in increasing the inventory of medical equipment and supplies, and in helping to increase the number of hospital beds. Community-based organizations, CBOs, are often on the front lines of social safety net protection programs, so supporting these ongoing efforts can be the fastest and most cost-effective way of helping those hardest hit by the pandemic, and they also have considerable social capital. And also, another challenge is maintaining transparency and accountability. Those of you who attended Compacts, that should sound familiar. Large, urgent, remotely processed public assistance is an extremely appealing target for widespread scams and government corruption. Fraudulent claims, fake business records, pop-up businesses, fictive businesses and individuals, graft, embezzlement. I guarantee you will see all of this. So it's essential to anticipate attacks on the integrity of public payment systems with strict external oversight and tight internal controls. So I'd like to move from general overall fiscal policy strategy to specific fiscal policy instruments with examples from the United States and Indonesia. So we'll start with the United States and the public health context in the United States. We are implementing the second best public health response, as outlined earlier. Our response has been late. It's been led by state and local governments rather than the federal government, with various degrees of vigilance across the country. We have significant testing, PPE, ventilator, and medical staff shortages. We have insufficient hospital and morgue capacity, and the most vulnerable so far have been the hardest hit in the United States. That's the elderly, those with underlying health conditions or comorbidities, low-income individuals and households, and communities of color. And there's a high correlation between many of these factors. Our fiscal policy strategy in general has been to support the health sector to address the above noted deficiencies, to enhance social safety net, our social safety net for low-income households, to provide immediate relief to the most vulnerable workers directly, to assist employers, both SMEs and large corporations, and to channel aid through state and local governments and community-based organizations, and to try to leverage state and local and community resources and to partner with the private sector. We've also tried to provide some bilateral and multilateral international support. And the links to our monetary policy have been two. One is to maintain the flow of credit to households and businesses. And the second is to help finance fiscal expenditures. So the next slide is an overview of the major interventions to date from the federal government in the United States. So we've had 3 emergency appropriations. The first, the Coronavirus Preparedness and Response Supplemental Appropriations Act. The second, the Families First Coronavirus Response Act. And the third and the biggest, the Coronavirus Aid, Relief, and Economic Security Act, known as the CARES Act. These have been enacted quickly and with widespread bipartisan congressional support, quite a rarity these days in Washington. The total estimated cost is about $2.2 trillion. What does that mean in a comparative context within the United States? That's equal to over 10% of 2019 GDP, which was around 21 trillion US dollars. It's about half of the current federal budget, and it's double the estimated pre-pandemic budget deficit of over $1 trillion. It's a really big number, a lot of zeros there. How does that compare with the last major challenge? It's double the 2008 Economic Stimulus Act passed under President Bush and the 2009 American Recovery and Reinvestment Act under President Obama. The total cost of those two laws was about $1 trillion, which was about 7% of our GDP in 2009. And these packages focus on economic relief, not economic stimulus, like the 2008 and 2009 measures. This is a lot, but I think supplementary emergency appropriations are quite likely, particularly to enhance healthcare, food, unemployment, state and local, and small business assistance, and maybe to introduce something of a super Chapter 11 to prevent systematic or systemic bankruptcy, which is mass default and debt gridlock, without resorting to a blanket moratorium on all financial obligations. It's a bit technical, but we can come back to that in the Q&A if you want to know a little bit more about that. So what I'd like to do in the next 3 slides is to go through each of these acts in a bit more detail. So the first act, it was enacted in the beginning of March. It was around $8 billion. Most of that was discretionary spending. $500 million was for Medicare, telehealth mandatory spending. Medicare is health insurance for retirees in the United States, and this would allow Medicare providers to furnish telemedicine services to seniors. The discretionary spending includes about $1 billion for medical supplies, healthcare preparedness, community health centers, and medical surge capacity, over $2 billion for prevention, preparedness, and response, about half to support state and local agencies, and over $3 billion for research and development of diagnostics, therapeutics, and vaccines, over $1 billion to fight COVID-19 internationally. I know some of you are trying to total the numbers. It doesn't come to 8.3. These are only the big ticket items. And it's been allocated across the government, for example, to Health and Human Services, Department of Agriculture, Small Business Administration, and USAID through the State Department. The second law, about a week later, add a couple of zeros, now we're close to $200 billion. $2.4 billion discretionary spending from emergency supplemental appropriations, about $100 billion from increased mandatory outlays, and about $100 billion from decreased revenue. We're forecasting a significant decrease in federal, state, and local revenue, as is Indonesia. Again, across the government, Health and Human Services, Agriculture, Interior, Defense, Veterans Health Administration, and the Internal Revenue Service. And it had expanded emergency paid sick leave for firms with less than 500 employees, required most health plans to provide coverage for COVID-19 testing, excluding treatment, reduced eligibility requirements for unemployment benefits, increased funding for food assistance and nutrition programs, increased funding for detection diagnosis of COVID-19 by the Department of Defense, and money for IRS taxpayer services. The third law, passed about 2 weeks after that. It's really complex. It's very long. It's almost 900 pages. It's really a package of laws bundled together, so we call it omnibus legislation. It's about $2 trillion. We really don't know the full cost. It depends on claims, it depends on loan defaults, and so on. So $2 trillion is an estimate. That's over 9% of GDP, over 40% of the current budget. As part of this package, Special Inspector General has been designated, and we're facing many very difficult implementation challenges. And I'm going to present allocation by beneficiary in this case, and then the following slide will show this graphically. A lot of information, I'll go through it quickly. For individuals, the headline item is direct cash payments of up to $1,200 per adult and $500 per child if your earnings are less than $75,000, and it's phased out to zero up to $99,000, and it's double that for a couple. increased unemployment benefits. So unemployment insurance is administered by the states in the United States, so the level of benefits differs from state to state. So whatever your base benefit would be, it's increased by $600 per week for 4 months, and benefits have been extended for 13 more weeks. Broaden eligibility to include the self-employed, freelancers, contractors, gig workers, and it's extended to the end of the year under something called the Pandemic Unemployment Assistance Program. As I mentioned, the tax return deadline has been extended to July 15th. Something of importance to my students, over $5,000 in employer-provided tax-free student loan repayment benefits. You can receive assistance without declaring it as taxable income. Mandatory coverage by private insurance plans for COVID-19 treatments and vaccine pre-testing. Small businesses, less than 500 employees. The headline item is something called the Paycheck Protection Program. Emergency grants up to $10,000 for immediate operating costs and loans up to $10 million. Forgivable if they're used to maintain payroll, pay for rent, mortgage, or existing debt. And expansion of the Small Business Administration's pre-existing economic injury disaster loan program. This is what we use for things like Hurricane Katrina recovery. This provides loans up to $2 million and also emergency grants of up to $10,000. Big business loans with strict public disclosures. For example, they may not be used for stock buybacks, and they specifically exclude the president, vice president, members of the cabinet, members of Congress, and their spouses, and their children, and their sons-in-law, and their daughters-in-law. There's one special allocation for airlines and a fully refundable tax credit for all businesses if they keep workers on the payroll. Public health includes assistance to hospitals and community health centers, funding for diagnostics, treatments, vaccines, and expedited Food and Drug Administration drug approval, assistance to the Centers for Disease Control, veterans health care, telehealth, and increases in our strategic national stockpile of medicine and supplies. Social safety net and funding includes food security programs, including child nutrition. Schools are closed, and many children from low-income families had both breakfast and lunch at the schools. SNAP used to be called food stamps. Food banks and community food distribution programs, and also expanded to include American Indian reservations and U.S. territories. Money for state and local governments. Most have been earmarked for COVID-19 response, including direct aid. Also funding for community development block grants, K through 12 and higher education, and family assistance. Again, something important to students at Harvard, temporary student loan relief, and work-study conversion to supplemental grants. So if you had a student job, you can still be paid as a grant. This is what it looks like graphically. You can see most of the money went to individuals in the center, big corporations and small businesses to the lower left, state and local governments to the lower right, with smaller amounts to public health, social safety net, and education. So if that wasn't a lot, we have our central bank, the Federal Reserve, on steroids. The primary objective has been to support the flow of credit to families and businesses and to ensure smooth financial market functioning. The total estimated value of these actions is $2.3 trillion. It includes reduction of federal funds rate by 1.5 percentage points since the 3rd of March, so it's now almost zero, with forward guidance to provide some sense of certainty that these rates will remain low until the crisis is over. And this is important because it serves as a benchmark for all other rates. And the other big item is quantitative easing via basically unlimited or open-ended purchase of Treasury and mortgage-backed securities. Lending to what we call primary dealers, 24 large financial institutions. Backstopping of money market mutual funds, to help meet massive money market redemptions by investors. This will also include Treasury, who will cover potential losses from its exchange stabilization fund. Virtually unlimited repurchase agreements to funnel more money to money markets. Direct lending to banks through the Fed's discount window, the Fed serving as the lender of last resort, at a reduced interest rate and for a longer period. Temporary relaxation of regulatory requirements so banks can dig into their regulatory capital and liquidity buffers to increase lending. Direct lending to major corporate employers, purchase of commercial paper, support to households, consumers, and small businesses, support to state and municipal borrowing by expanding eligible collateral for funds described above. It's not a guarantee of municipal debt or state debt. It's not credit enhancement, but it's another way to support local government. And international support by cutting the rate and extending the maturity of international currency swaps, expanding swap lines to 9 additional central banks, also offering dollars to other central banks via a new swap line called FEMA. This is clearly much bigger and more aggressive than actions taken during the Great Recession. So if you're not busy yet, let's go to a second country, Indonesia, an example of a lower middle income country. For those of you not familiar with Indonesia, it's the world's 4th most populous country, 260 million people, more or less. It's got a $1 trillion economy, number 16 in the world. It's a member of the G20, and it's a decentralized, competitive democracy. And it's had extraordinarily prudent macroeconomic management for the last 2 decades, since the East Asian financial crisis in the late 90s, averaging around 5% real growth annually, single digit, low inflation, very modest deficit and debt, a stable convertible currency with an open capital account. So the public health context, rather than repeat the US, I'll just highlight the differences in yellow. So rather than state and local in Indonesia, it's provincial and local governments. A special challenge in Indonesia is the timing of the fiscal response. Ramadan, the fasting month of Ramadan, starts in 1 week, followed by the feast at the end of Ramadan called Lebaran or Idul Fitri. This makes it very, very challenging culturally and socially to implement, for example, self-isolation strategies in Indonesia. In terms of the vulnerable, rather than communities of color, another vulnerable group in Indonesia would be the rural population and populations off the islands of Java and Bali. Unfortunately, the first two packages in Indonesia were a stimulus rather than relief packages, and I'll explain that in a moment. And then rather than provide bilateral and multilateral international support, Indonesia is trying to utilize this support. So first an overview and then a little more detail about the fiscal interventions. 3 emergency appropriations. For convenience, I'll just call them Package 1, Package 2, Package 3. Enacted quickly and with widespread multi-party support. The total estimated cost, and all these figures are estimates. My apologies to our friends from Indonesia. Sometimes it's very hard to get precise numbers. But the estimated cost, and I'll try to use rupiah whenever possible because of issues with exchange rate fluctuations. But the total estimated cost is over 500 trillion rupiah, roughly 33.4 billion US dollars. What does that mean in Indonesian context? It's about 3% of 2019 GDP. It's about 1/5 of the state budget, the current state budget. It's 50% more than the targeted budget deficit. The first two packages focused on economic stimulus. The third package focused on economic relief. And like in the United States, supplementary appropriations are likely, particularly to support the country's social safety net. So now a bit more detail about these packages. The first one, these are approximate dates. Sometimes it's difficult to distinguish between an announcement, enactment date, and effective date. So end of February, about 10 trillion rupiah, about 743 million US dollars. And the purpose was to protect the impact on the domestic economy of COVID-19 outbreak in China, since China is Indonesia's top trading partner and major source of investment in tourism. And this was by stimulating consumer spending and tourism. This was seen as an external problem that would have indirect effects on Indonesia's economy at the time. It included a 30% increase in subsidies for basic needs, something via kartu sembako, for about 15 million poor households for 6 months, financing support, housing industries, important economic growth stimulator, incentives for airlines and travel agents, some local government tax exemptions for restaurants and hotels, which was covered by central government payments to regional governments, and some other provisions to promote tourism. The second package, about 2 weeks later, adding some zeros again, now it's over 100 trillion rupiah, about 8 billion US dollars. Purpose was the same as the first stimulus package, but it was focused on stimulating manufacturing. It included simplified import-export procedures, expedited VAT refunds for exporters, tax relief for manufacturing workers, import tax exemptions, and corporate tax reductions for manufacturing companies. And the third, and by far the largest package, was effective the 7th of April via something called the Perpu, which is a government regulation in lieu of law. It's to act quickly in an emergency. About 400 trillion rupiah, around $25 billion. The purpose, to quote, is to undertake extraordinary measures to ensure the people's health, safeguard the national economy, and financial system stability. A lot here. Healthcare spending and social protection spending, mainly for cash transfers and food, some enterprise tax incentives and credits, economic recovery program, including credit restructuring and financing for SMEs. I should say that it's very difficult in places like Indonesia to assist SMEs and the self-employed without externally validated employment and financial records. Some reduction of state budget capital injection for state-owned enterprises, reduction of the corporate income tax, some additional digital economy taxes, some regional treasury flexibility, and very important in the Indonesian context, 3-year relaxation of the state budget limit of 3% of GDP for a budget deficit to 5% of GDP, and some legal protocols to, based on some unfortunate political history, senior government officials who are acting with good intentions and according to prevailing laws cannot be sued or face criminal charges for state losses resulting from these interventions. And Indonesia, I think, is quite wisely trying to channel social assistance via existing programs, particularly something called Bantuan Langsung Tunai, or unconditional cash transfers, and through their national health insurance program. As I mentioned earlier, Indonesia does not have unemployment insurance, which has been a major vehicle to assist employees in the United States, but they are issuing something called a 4-month pre-employment card for the informal and SME sectors. How is Indonesia paying for all this? First step, internal budget reallocations, and then they took 70 trillion from accumulated cash surplus and another 60 trillion from a state endowment for education, but that still left a deficit, the original estimated deficit plus the new deficit from these interventions of 852 trillion rupiah. And that's from a revised 2020 state budget. That's equal to about 5% of GDP, and a new debt to GDP ratio of 35%. It was 30%, around 30% the previous year. Roughly, this is being funded, this additional deficit is being funded by $449 trillion in something called pandemic bonds, mostly purchased by Bank Indonesia. The problem is if they're purchased by the big banks, it will crowd out access to credit by the private sector. Almost 300 trillion in other government debt papers, including $1 billion in Asia's first 50-year US dollar bond issuance. Pretty remarkable. And around 100 trillion in multilateral loans from the World Bank, the ADB, and the AIIB. Complementary policy by Bank Indonesia, similar to Fed interventions. The primary objectives, also similar, support the flow of credit to families and businesses by mitigating the risk of non-performing loans or loan defaults, lack of liquidity in Indonesia, especially US dollars, and the crowding out effect that I mentioned earlier, ensure financial market stability and avoid stagflation, especially since the rupiah has depreciated rapidly and substantially. The last time I checked, it was about 25% depreciation over the last month. Lower interest rates and lower reserve requirements, intervention in spot currency, DNDF, and bond markets, purchase of debt papers by the government, especially these pandemic bonds, and this required revoking a stipulation in the 1999 Bank Indonesia law that restricted government bond purchases from BI to the secondary market. It's reluctantly also serving as a lender of last resort, and it's exploring many other policy options. For example, bilateral, multilateral central bank swap lines, including something from ASEAN +3, Macroeconomic Research Office, based on the Chiang Mai Initiative, something the World Bank might offer called DDO. It's very complicated. Maybe the IMF might issue new SDRs, which is something like IMF currency that is convertible. Very technical, but a lot of very creative thinking going on, trying to expand quite limited resources. Last slide, the path to recovery. The transition to normalcy will probably be slow and incremental. Some call it a rolling reentry based on perceived, this is important, perceived public health risk, highlighting the continued importance of placing economic policy in a public health context. It could vary by location, by economic, by social activity. And it's a little bit like walking a tightrope. If you walk too fast, you fall off. You walk too slow, you fall off. And it's not quite certain when you will be on solid ground again. And there's a real public policy dilemma here across countries. The irony is that the stricter and more effective community lockdown might be, the longer and more lethal the path to recovery. Because an unintended consequence of bending the curve is a lower level of COVID-19 exposure and thus adaptive immunity. I'll explain that in a moment. Nonetheless, 4 public health benchmarks that you want to reach to start on the path to at least a partial recovery are: have a sustained reduction in cases for at least 14 days. Hospitals must be able to safely treat all patients requiring hospitalization without resorting to crisis standards of care. You have to have the capacity to test everyone with symptoms, monitor confirmed cases, and trace contacts of those affected. And you want to have the capacity to widely test for evidence of prior infection. And the test has to be both reliable and certifiable. And we also have to understand how to interpret the test results. This would enable at least a partial recovery by gradually developing community-wide herd immunity through adaptive immunity, that is, immunity via infection rates rather than vaccination. This entails an exposure that is staggered, plus testing, treatment, and tracing with privacy protection and continued vigilance for the most vulnerable. And it's a second best solution given the lead time to develop, test, produce, and make widely available effective vaccines. And full recovery will probably require an effective and widely available COVID-19 treatment and or COVID-19 vaccine. So, world, get well soon. And I think I will stop there. We have about 10 minutes for some question and answer.
I can see Ramon has his hand raised.
Give me a moment. Okay. Since I'm having a little difficulty, Laura, getting my old screen back. Oh, James probably stepped in and saved me. Thank you. Oh, what a gallery of beautiful people. Okay. Okay, so you spotted, is that Ramon Ortega? Okay, Ramon, please. Question.
Hi, everyone. It's nice to be with you. A little bit changed due to the coronavirus. My questions are, first, how to get to the small businesses, entrepreneurs with the credits. I was listening here in my country that there need to be like a guarantee from the government because they might not have the capacity for credit. So in order to be able to channel funds to them, there should be a guarantor, which people believe should be the government. And my question is, would that be a good proposition? And second, I heard that Apple and Google are working on how to control safety environments so people can go back to work, go back to specific airports and things like that. Is there anything that you're aware of that you could share?
Okay, why don't we take a few questions and then try to answer them together. So, Rodrigo. Chile.
Yes, here. Yeah, how are you?
Okay.
Thank you very much for the presentation, Professor. I have a question which is related with the corporate sector, okay, with the private sector. So in this crisis, we have different problems, for example, in the banking sector, not in the banking sector so far, but in the transportation sector, for example, some airlines companies, Delta, American Airlines, LATAM, etc. But you also have different demands from other companies from different sectors. So my question is, who has to receive the first financial support from the government? How can you choose the first sector or the first company to receive the financial support from the government? That's my question.
Okay, let's try one more. Lydia? Lydia out there?
We can hear you, Lydia.
Have you unmuted yourself, Lydia?
She looks unmuted, but we still can't hear you.
Well, we'll come back to Lydia. How about Juan? Juan?
Can you hear me?
Yes.
Hello, everyone. It is a pleasure to hear from you guys. I would like to listen from you Just a few words on tax policy, excess profits tax, and any other trends vis-a-vis tax policies in this context.
Okay. As usual, wonderful, challenging questions that I can't do justice to, so I'll do my best and ask for forgiveness beforehand. The question about small businesses, that's a huge problem around the world, and even in the United States, we're having great bottlenecks with a pretty robust response from Congress in trying to get the money to the small businesses. Part of the problem is that it's being done through the Small Business Administration, but they're using commercial banks for most of the emergency loan programs in the United States. The SBA usually administers them directly. So they are using the commercial banks, but they have to be approved SBA lenders. And there's just a huge bottleneck in going through the paperwork. There's a lot of confusion over the regulations, especially about who is liable for fraudulent loans. So the banks are a little bit uncertain. There's a bottleneck in getting SBA approval before the money is dispersed. And then if you get to countries, maybe middle income or lower income, where you don't have an SBA, you don't have people with relationships with the banks, they don't have the audited, credible financial statements to quickly assess their numbers, it's an even greater problem. So in terms of guarantee in the United States, these are federally insured loans, and the loans can also be convertible or forgiven if they're used for specific purposes, mainly for keeping people on the payroll. So it's a very generous program, very, very low interest, guaranteed, so they're essentially uncollateralized and forgivable. But as I mentioned, in places that don't have that. And then the other interesting thing in the United States is that fintechs are starting to partner. Fintechs who lend to small businesses, but not this amount, are partnering with SBA approved lenders to help identify people normally left out, either underbanked or not banked at all by traditional SBA lenders, helping to do quick appraisal and helping to manage the loans, service the loans for a fee. So I think fintech maybe can provide a useful role, but your question about ultimate liability, you don't want to create moral hazard, but you want to get the money out. These businesses can't survive. I mean, you close them, everybody, immediately, everywhere, and they don't have much of a cushion. Everywhere around the world, they have working capital loans already. Great question, a big challenge, even in a rich country like the US with a pretty good infrastructure to help small businesses. Apple and Google, yeah, they're doing some testing, but we have some real privacy issues in the United States. And I think you would need the consent of people to participate in this. And there's a fear that it could be used for other purposes, not just to trace contacts to those who have been affected. So it's being, I think the problem isn't really the technology, it's citizens' privacy that we're gonna have to deal with in the United States. How do you choose which airline, which companies? We say don't pick winners and losers, don't be selective. We follow the rule pretty well in the stimulus package, with the exception of the airlines. It's the only industry named in the legislation, and they just negotiated, I think, a $25 billion bailout. It took some time, again, to make sure that it has some pretty strict conditions on it for the airlines. Try not to choose businesses. The rest of the legislation applies to all businesses of any size. Try to do that and not get into the trying to pick winners and losers. Tax policy in general in this context, how to cut your losses. People are not thinking about structural reform right now. They're just figuring out, in the United States, we're looking at maybe a 50%. Not in the US. The state of Massachusetts, I know, they're looking at perhaps a 14% reduction in revenue. Indonesia forecasting maybe 20% reduction in revenue. So they're not thinking about structural reform. They're trying to figure out how to close this fiscal gap with very few resources. I think structural tax reform, which is badly needed in the United States, has been on hold probably in most countries. Laura, how are we doing for time?
Yes, so in theory it's 1. So our hour is up. I see many hands raised here.
Can we ask just one? I see one from Indonesia. So let's try to do let Indonesia weigh in and then we'll call it a day. Is that okay, Laura? Budi? Budi has his hand up. So Budi, let's hear from Indonesia since I talked a lot about Republik Indonesia. So what do you have to say?
Oke, Pak J, terima kasih. So, apa kabar?
Balik kasih.
What is your take on the Indonesian, those 3 packages, if you like? Is that too small? Is that too big? Is that too late? Is that the right timing? And then what will be the risk and challenging in implementation? I think like the BLT and then cash transfer is not easy to implement, right? And what are the risks on those? And last but not least, maybe what is your suggestion? What is the recommendation to, make it more effective package, if you will? Thank you.
It's never enough. And Indonesian standards to change the limit on the deficit is very dramatic, and to allow Bank Indonesia to make the interventions they're doing is very dramatic. So, despite the missteps of the first 2 relatively smaller packages, I think Indonesia is doing all they can given the scarce resources available and the political constraints. You know them better than I do. And I think the structure, I think the priorities are absolutely right in the 3rd package. And I think you will need supplementary packages if they could be financed. And I think they should focus on cash and food. I mean, to prevent social unrest. You have so many vulnerable people that are hit very hard. And, they live from day to day. So I think the emphasis right now on cash transfers, unconditional cash transfers, the BLT is absolutely right. And all these food supplemental packages, there are several of them, it's absolutely right. They will need more money. And then the third thing in terms of health, I think, is develop some capacity for more widespread and credible testing. You're flying blind. It's hard to open up the economy if you don't know who's been infected, you don't know the transmission rates, you don't know who has developed perhaps some potential immunity, like in many countries. So cash, food, testing is what I would be focusing on. But I think, and many countries represented in this webinar, I think will agree that, given how little fiscal space there is, how many constraints you have, and hitting Ramadan, hats off to the policymakers in Indonesia. I think they're doing their best they can under very difficult circumstances. So with that, I would just like to say to everybody, thank you for joining this. Take care of yourselves. Take care of each other. We need your remarkable talents and incredible dedication now more than ever. So stay healthy, everyone. Take care.
Thank you, Pak J. Terima kasih.
Thank you.
Thanks, everyone.
Thank you.
Thank you.
Selamat.
Bye.
Selamat.
Thank you.
Bye-bye. Thank you.
Bye, Dave.
Bye, Laura.
Thank you, galera.
All right, take care.
Bye. Take care. Thanks.
Okay, stay healthy.
Rodrigo.
Let's have a selfie.
Bye, everybody. Bye, Professor.
Thank you, everybody.
Selamat.
Bye.
Thank you, Jay.
Thank you.
Bye. This is James.
Good idea, Jawad.
Thank you, birthday.
Bye,
everyone. Nice to meet you all.
Bye, guys. Have an excellent day.
Bye, Dave. Thank you, Laura. Bye-bye.
Bye.
Thank you, Laura.
Thank you. Thank you very much. See you.
Thank you. Salamat, Laura.
Thank you, Laura. Thank you, Jay.
Bye, Laura. Thank you very much. Bye.
Oh, I leave. Laura, thank you.
Bye,
Come on, say
everyone.
bye bye. Thank you.
Okay, thank you, Laura. Bye. Thank you.
Yeah, see my classmates.
Hi.
Ah, nice, this voice.
Bye bye.
Bye.
Yeah,
All right, Jay.
Professor
Start by
G.
Jay.
CJ. CJ.
Everybody keep safe. God bless. And take care.
No, open the window. This window. Open the curtain down.
Very much. Have a good night.
Hi. Daddy, so how do you get them on Instagram?
It's not Instagram.